Welcome back to EG Financials. Today we're recapping the performance of the stock market and the economy from last week, which was July 10th to July 14th, 2023. Overall, stocks closed mixed on Friday, but higher for the week, with the S&P and Nasdaq making new year-to-date weekly highs and closes. And if I sort the weekly performance for the sectors, information technology came out on top at a 3.8% return, consumer discretionary 3.7%, and at the bottom we have the underperformer, which is energy at 0%, and consumer staples at 0.78%. Some of the drivers of this performance are the better than expected inflation reports from last week from the Consumer Price Index CPI and the Producer Price Index PPI, which was cheered by the investors. The positive inflation data releases from last week also provided investors hope that the Federal Reserve will only increase interest rates one more time by 25 basis points. Their next meeting is expected to take place July 25th and July 26th, and let's take a look at the monthly performance of the sectors. Consumer discretionary is on top at 4.95% for the month. Then we have industrials at 3.28%, financials at 3.24%. And at the bottom, when looking at the monthly performance, we have healthcare at a negative 0.5% and utilities at a negative 0.21%. And as you can see, the stock market is enjoying the easing inflation results, continuing strength in the jobs market, and a resilient economy. Here we have the performance for the past 3 months. Information technology is on top at 20.9%, consumer discretionary 18.6%, communication services at 13.6%. And at the bottom we have energy at 6.3% decrease, utilities 4%, healthcare 2.4%. And another metric showcasing the strength of the economy is consumer sentiment, where the last report rose 12.7% to a reading of 72.6, which is the best reading in nearly 2 years. Let me sort performance for the past year in descending order. We have information technology at 38.5%, industrials at 25.9%, consumer discretionary at 21.2%, and at the bottom we have real estate with a decrease of 5.4% and utilities with a decrease of 4.85% for the past year. And the focus for this week, for July 17th to July 21st, 2023, will be a focus on earnings as Q2 earnings season kicks into gear. We have about 295 companies on deck for this week, and it includes companies like Tesla, Netflix, Microsoft, Alphabet aka Google, Amazon, and Meta. And historically, stocks do increase during earnings season. And lastly, let's take a look at the sector performance for the past 5 years. Information technology has increased 147%, consumer discretionary 54%, healthcare 51%. At the bottom, we have energy increasing almost 10%, real estate increasing 19.17%. And every day we get new data for the economy, the stock market, and the real estate market, so make sure you follow for more updates.